Good morning. We are presenting our integrated treasury transformation strategy for the CAFTA case 2025. Our company faces three core challenges: currency volatility, particularly in Nigeria's USD market, liquidity fragmentation across subsidiaries, and unstructured surplus investments. To devise a currency risk strategy for the Nigeria, we began by diagnosing the exposure, mapping USD tables, export receivables, and intercompany flows across Africa. We then assessed local constraints, including Central Bank of Nigeria circulars, Naira convertibility, and repatriation limits. Using ARIMA and Monte Carlo models, we forecasted USD NGM and USD INR exchange rates to quantify the potential cash flow gaps. Based on this, we created a layered strategy combining operational solutions such as intercompany netting, supplier financing, and local currency funding with financial hedges like short-dated forwards and cross-currency swaps. These actions are governed through a TMS supported by a Gen AI alert system that continuously scans macroeconomic and policy signals. Whenever a forecast shortfall is detected, the system recommends pre-approved treasury actions, for example, drawing on intergroup USD lines or activating supplier finance. And also, to address the liquidity fragmentation, we designed a multi-currency cash pooling structure managed centrally by a group treasury. So here is how it works. Subsidiary balances are swept daily into a central pool, grouped by currency clusters like INR, USD, and NGM. The pool funds shortfalls internally before any external borrowing is moved. Then a real-time TMS dashboard provides per currency liquidity visibility and exception alerts. Now, this directly optimizes liquidity by allowing instant internal funding, reduces idle balances, and eliminating unnecessary intercompany foreign exchange conversions. It improves working capital efficiency, lowers interest costs, and ensures cash is always where it's needed the most. Thank you.
Once liquidity and currency risks are stabilized, surplus cash can be invested strategically. Our treasury management system, integrated with forecasting and risk engines, acts as the single source of truth, ingesting data from the cash ladder, bank feeds, and hedge metrics. The TMS runs an efficient frontier optimizer to identify the ideal portfolios mix across INR and USD markets, balancing yield with liquidity adjusted value at risk. The system generates three optimized portfolios: low, medium, and high risk, each aligned with both approved risk appetite and regulatory constraints. This transforms surplus management from static deposits into a data-driven, yield-maximizing process with full governance and auditability. In summary, our integrated treasury model delivers measurable outcomes. This initiative redefines treasury from a transactional function to a strategic value creator, one that safeguards liquidity, enhances resilience, and unlocks financial agility across global operations.